Welcome in everyone. As always, it is a blessing to be here. Yesterday, crypto ripped on the IREN peace deal, and today the market is doing exactly what healthy markets do after a move like that. It is digesting. Bitcoin is hovering in the mid 60,000s, basically flat on the day. Ethereum is holding just under 1800. XRP pulled back to $1.22 after a big green day. Hedera is around 8 cents. Proton is sitting near a quarter of a cent. And the whole ISO 2022 basket is bunched together near the lower end of its range. On the surface, it looks like a sleepy, slightly red afternoon. But here is what I want you to notice, because this is the whole story today. While most of the board is catching its breath, Saylor XLM is still green. And underneath the surface, something much bigger is happening that almost nobody is talking about. Let me show you piece by piece, because once you see it, you cannot unsee it. Start with the single most important chart in crypto right now, Bitcoin accumulation. On-chain data shows buyers have added over 250,000 Bitcoin in the zone between $59,000 and $67,000. Let that sink in. 250,000 coins scooped up right here, right where we are trading. That is not panic selling, that is quiet, heavy accumulation. And here is the part that makes it powerful. Fear and greed is still sitting at 23, extreme fear. So you have the strongest hands on the planet buying aggressively while the crowd is still too scared to move. That gap between what the smart money is doing and what retail is feeling is exactly where fortunes get built. That is my number one takeaway today, and everything else I am about to show you sits on top of it. Now I want to reframe how you are even thinking about this market, because one of the sharpest ices out there just nailed it. The Bitwise chief investment officer said the question everyone keeps asking, is the bottom in, is the wrong question entirely. The right question is where this asset is going over the next several years, not whether today is the exact low. And he is right. When you zoom out, arguing over a few $1,000s at the bottom is noise. The signal is accumulation, adoption, and the rails being built underneath all of it. Stop trying to time the perfect candle and start watching the trend. Now the macro, because it matters. The Bank of Japan just raised rates, and instead of crypto cracking, Bitcoin rallied right through it, with names like Stellar, Injective, and Uniswap advancing. That is a strength signal. When an asset shrugs off a tightening central bank, the single thing that is supposed to pull liquidity out of risk assets, it is telling you the buyers are in control. Pair that with the Iran war premium that already unwound this week, and the setup into the back half of the year is constructive. This is a market that wants to go higher and is being handed every excuse to fall and refusing to take it. Now let me get to the names I actually care about, and I'm going to show you the levels on each one. Start with XRP at $1.22, down a couple percent on the day, and that is completely fine. After a 10% rip yesterday, a small pullback is healthy. It is the market exhaling. Look at the chart. Over the last 90 days, XRP has held between roughly $1.05 and $1.60. We are sitting comfortably mid-range above the $1.14 level I have been watching like a hawk. My read is unchanged, hold $1.14, and the path stays pointed at $1.35. Then that $1.54 high above it. A red day inside an uptrend is not a warning, it is an invitation. Next, Saylor XLM, and this is my standout today because it is the only major in the green, up almost 1% at 22 cents while everything else pulls back. That is relative strength, and relative strength on a down day is one of the most reliable tells in this entire game. The 90-day range is 14 cents to 29 cents, and Saylor just keeps grinding higher off that 14-cent floor while shipping real payment and protocol upgrades. When a coin refuses to go down on a red day, when it leads the rally right off a central bank rate hike, you do not look away, you pay attention. Reclaiming the mid-20s opens the door right back to 29, and I think it gets there. Then Hedera HBAR at about 8 cents, down a couple percent, still hugging the lower end of its range near its multi-month lows. I keep saying it, an enterprise-grade network pinned against multi-month support. On a day the whole market is soft, is a coiled spring, not a falling knife. The fundamentals have not changed, only the price has, and that is exactly the disconnect I am looking for. I am watching for a reclaim of 9 cents to confirm the turn. Patience here pays. And the one I keep telling you not to sleep on, XPR Proton around 0.2 of a cent, sitting near the floor of its range. The asymmetry has not changed. A real working network with fast finality and built in fiat rails, priced like it is nothing. On red days, names like this are where I am looking to accumulate, not panic. This is the highest conviction watch on my entire board still, and I want you to understand why. When the rails, everyone, is quietly moving to finally get repriced, the smallest names with real utility are the ones that move the most. Think for a second about what Proton actually does. It settles a transaction in under a second. It has fiat on ramps and off ramps built directly into the protocol, not bolted on afterward. And right now, it trades like a project nobody is using. That is the textbook definition of asymmetry. The downside from these levels is small. And the upside, if the market ever wakes up to what is already shipping, is the kind of move you only get a few times in an entire cycle. I am not promising it happens tomorrow. I am saying the risk and the reward here are tilted as far as anything on my entire board. Quick hits on the rest of the basket. Quant is actually green today, up near $71. XDC and Algorand are basing near their range lows, coiling. The thread is the same. The ISO 222 rails are the plumbing the banks are quietly moving to, and this basket is consolidating, not breaking. Consolidation after strength is bullish every single time, and let me be crystal clear about why I keep hammering this basket, because it is the single most important idea on this channel. The entire global banking system is in the middle of migrating to the ISO 222 messaging standard. This is not a theory, it is happening right now on real deadlines, and it is the biggest upgrade to the plumbing of cross-border money in decades. These networks were built around that same standard. Now, I am not telling you any single one of them is guaranteed to win. Nobody can promise you that. What I am telling you is this: when the rails the banks actually use get rebuilt from the ground up, the assets that live on those rails are carrying a catalyst that almost nobody is pricing in yet. That is the entire thesis in one breath, and it is exactly why I am patient. Now, the news driving the bigger picture, because the on-chain story and the headline story are finally starting to rhyme. First, that accumulation data, 250,000 Bitcoin absorbed in this zone, is the headline of the week, full stop. Somebody with very deep pockets is treating this range as a gift. Second, Michael Saylor doubled down that Bitcoin does not need Ethereum-style yield to win, reinforcing the pure store of value thesis that institutions keep buying. He is not chasing yield, he is chasing scarcity, and the biggest balance sheets in the world are following him right into it. Third, the IMF flagged that stablecoin adoption in Nigeria is testing the limits of monetary policy. Read that again. Stablecoins are now so big that the IMF is openly worried about them, which tells you exactly where this is heading, straight onto the rails we keep talking about. Fourth, the institutional machine did not stop for a red day. A French treasury firm, capital B, is building a Bitcoin credit instrument, bringing the Saylor playbook straight to Europe. And the minor IREN just expanded into Europe with an acquisition while piting into artificial intelligence. New treasuries, new credit products, miners scaling and diversifying. This is what quiet conviction looks like at the institutional level. Nobody who is actually building stopped because of one soft afternoon. Before I wrap this up, here is exactly what I am watching into the rest of the week, so you have a plan instead of a feeling. On Bitcoin, I want that 59 to 67,000 accumulation zone to hold. As long as the buyers keep defending it, every single dip is a gift, not a threat. On XRP, the line in the sand is $1.14. Hold it, and the uptrend stays intact. On Stellar, I want a clean reclaim of the mid-20s to confirm it stays the leader. And on the basket as a whole, watch for the first day where every one of these names is green together. That is the tell that the rotation has flipped from quiet accumulation into markup. Until I see that, the playbook does not change. You accumulate slowly, you stay patient, and you let everybody else panic. So zoom all the way out. We have 250,000 Bitcoin accumulated right here, a central bank tightening that the market shrugged off, the sharpest analyst telling you to stop asking about the bottom, stablecoins scaling to the point that the IMF is nervous, institutions still buying and building across Europe and beyond, and Stellar refusing to go down, all while sentiment sits in extreme fear at 23. Every one of those is a strength signal hiding under a red candle. Fortunes are not made on the green days when everyone feels brave. They are made on the quiet red days when the smart money is accumulating and nobody is watching. That is today, and that is the whole game. You know the drill. If this brought you value, hit that like button, subscribe, and ring the bell so you do not miss the next one. It genuinely helps the channel reach more people who need to hear this message. This is not financial advice, and you should always do your own research. But weeks like this one are where the next move is quietly built. Stay patient, stay focused, and I will see you in the next one.